I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Futures are up a bit as Europe and our markets try and digest a nice 2-day bounce. Japan is up nearly 3% and acting better as the country's 20% dip proved to be a nice time to buy. It's the end of the second quarter. How well did you perform? I'm Brittany Umar and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer, T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are positive this morning as the snapback we've seen this week seems to be continuing as the market comes to as the quarter comes to a close. Scott, would you say that the summer low has been put in?
I think it's a little too premature to say that, but I do think that the dresses that have been running around in the market are getting prettier as it's summertime and as we approach the end of the second quarter. You know, we were talking about, will they come in and dress up the market for the end of the second quarter, the end of June? And it's just something that happens, you know, in the stock market. And there were people on Twitter asking me, like, what does window dressing mean? You know, do I get nice curtains or this? You know, I'm like, no, what it means is that there are individuals out there that have to show performance and they get paid sometimes based on, you know, how they're doing. So certain stocks that have been acting well act better because they want to show them on the books. Certain stocks have been acting like crap because there have been some of those too, excuse my French. You know, they get thrown away. So it's an interesting time. But anyway, you know, we've had a nice performance this year. So with the move off the highs that we've seen, figured maybe once we put in a pivot low like we did earlier in the week, maybe it'll turn into a tradable bounce back to resistance.
Why don't you show us a visual then of the snapback so we can
Okay, so if you know, I wish it was a real pretty dress on the screen, but it's just as pretty. It's a nice chart. Okay, sometimes charts to me are very pretty, and here you go. This one was very pretty. I love the word pretty today. Pretty today. Anyway, 1560. There you go. That was the low. That coordinated halfway between this situation. Remember this breakout failure over here? Okay, that was that actually double top way back when for the last decade. Went a little bit below and then came back. Okay, and that was when, you know, the 100-day somewhat held. So really, this was your day that it basically said, okay, I think I could be a buyer now that the 100-day was reclaimed around 1577 versus the low. Then we broke through this small little pivot, and right now we are at resistance number 1. If you were trading for a snapback, not for a new portfolio approach, this potentially was your trade, right? 1560 to 1603, about 30 handles of tradable action. You know, but if you're looking for a spot to reshort, you know, potentially it might be a little bit closer to this wedge or this broken trend line, which could be also a retest of the 50-day right around 1618. You know, and then you also have a gap fill that takes you all the way to 1627. So I would say this was the snapback that I always call like the easier portion of the trade. Now it's the more selective area where the bulls are going to really have to, you know, show some commitment to, you know, to show some higher prices here. It's
pretty interesting that so many were so afraid of that 20% pullback in Japan, but that actually proved to be viable.
Yes, and it proves that entries and exits matter. You know, that market was in fuego going from, you know, November to that recent top, almost up 50%, maybe even more. So whenever you have a 50% move, fast and furious, the declines are going to be just as dangerous or just as harsh. And it pulled back 20%. So everyone's like, oh no, now Japan's in a bear market. I'm like, come on. Doesn't mean they're in a bear market. It just means that it pulled back, you know, more than a third of that move, which according to the retracement rules is decent. But anyway, you know, if you look at the chart here of the EWJ, you will see that, you know, you did have this outside day just like we had in our markets. So you had a nice clean trend where it was hugging above the 8-day moving average. So if you were with this trend in Japan, you never had any pain. And then right here on that outside day, you said, thank you very much. That's my sell signal. From there, boom. Then you had this bottom tail, almost just as blaring as this one up here, and it was above the 200-day. From there, really nice snapback, you know, some maneuvering. And now after consolidating, and you look at this pattern here, you have your low. Okay, you now have a floor, and this is a higher low. And now here's your basic resistance where we're opening the year around 11. So if you accumulated some Japan equity in here, perhaps now it starts getting back in motion and we've started a new potential trend of higher lows, and now it's going to have to take out this 11 and change and close above it. And real quickly, the DXJ, some use this as a vehicle. It too, very tight pattern here. Okay, it's going to have to start getting above this 45, 46 to then, be a better bounce to 47 and change. But this also gave you a blaring outside day red dog reversal, your exit sign. Okay, always look for entries and exit signs.
Well, back in our markets, there have been leaders during the pullback. Biotech stocks perked up yesterday, and names like AMGN showed some relative strength, rallied more than 3%.
Yes, and people that have missed the bio move during this correction were saying, okay, where do I buy? So now is when you start seeing some levels or some patterns that start to show you that you could have some new entries. And if you look here at AMGN, okay, you will see, after basing above the 200-day, it perked up. So yesterday was probably a good day to enter. And now if it were to break this small lower level pivot here and get above like a hunch, the next spot is about 103, which is where it broke down from, in late May.
And how about Biogen? This one actually rallied almost 5% yesterday.
Yes, and I know Chuck Earl and I'm going to give Carter a shout out. We call him Walter sometimes. Anyway, it did have its first day. You had this descending channel here, if you take a look, or a very falling wedge. That was pretty harsh actually, and it finally broke above it. Here was your entry point. I think they had a decent day with this yesterday, above 203. This is only day one, so this could have been your entry after a nice pullback. Look at this trend. This was your trend that broke. Here is your exit sign. Here is your day one potential entry sign, and now it's got some room to the moving averages, which coming around 217.
How about ACAD? Has been one of the strongest stocks in this group and even held above the 21-day on the recent pullback. That's pretty impressive.
Yeah, and this one has been one of these cheaper names that it's been acting well, that came on the, I think, on the radar of like 6 months ago. And if you look here, I know Sperling trades this here and there. This stock had a really nice move right here. Look at that tight pattern when it broke above 14. Gave you some follow through. Started to fail a little bit with the rest of the market, but look at this, the 21-day. Didn't get to the 50-day, didn't get to the 100-day. That's showing you some strength. Here's your level of interest. Just know with these little biotechs, you better know if they have any kind of data due or some kind of FDA approval or whatever. FDA? Yeah, something like that. Anyway, just know what drives these things, and it tends to be some news. So, with risk, there's reward.
And lastly, let's just talk to CELG, which, just like its peers, rallied about 3% yesterday. Still looking good? Yeah,
this mega cap was something that we've looked at many times, and now the pattern's tight again. All you could ask for is the tight pattern to give you a potential entry. And here it is. Look at this. This was your pretty much day one. You have your downtrend here. You have your resistance. It didn't really show that much relative strength. It came in and held the 100-day just like everything else. But if it wants to get going, if the bios want to show leadership, this should get up and close above 120 and get some continuation. I remember playing it back here. This was a nice trade that some people started to miss. Here was your breakout failure, and then here was support that broke. So now it's creating a new base. Looks pretty good.
And coming up, we're going to go in the trenches with some more stocks that have been acting well. Right after this quick commercial break, we'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with more stocks that have been acting well. Some tech and tech-related names have held up well, including Tesla, which actually held up really well during the pullback.
Yeah, and not really surprising because we've spoken about this stock every day. So like, oh, where'd you get this one from? Anyway, this one holding up well. Not only just holding up well, actually showing leadership. We've been talking about how this one is one of the generals whenever the market wants to be strong, or even when it's not wanting to be strong. You look at the chart here, you will see, it held this mini uptrend Okay, it held above the 21-day. It broke above this mini little pivot, 104.20, closed well. Next spot to get above would be 107.13. And then there's the highs. Stock is moving very well, and at this particular point, the new innovative company that we see here does have the potential that at some point, you know, I do think it being so fresh. You look at just the monthly chart. The stock's only been around since, you know, what, 2011. And look at this. Look at the winner here. Wow. Shows you that you could be a stock picker and potentially find new companies that become public in the first few years. But anyway, going back to the chart, acting well, above 107, next spot's 114. You know, let's wait to see if it happens before or potentially after earnings.
It's pretty crazy when you look at that chart.
Yeah. It shows you that the market can make you money if you pick the right vehicle.
Right.
Even if it's electric.
Well, exactly. Another metaphor there for you. How about Amazon, which did have a nice 2-day bounce, and above what level do you think it needs to get to reach new highs?
I think it's going to be interesting because if we did put in the summer low, this is really the first high beta, you know, major tech company that I think is going to make new highs. We've spoken about it a few times. There's been some nice trades here, some frustrating trades. I remember the first time we were really focusing on it was right here. This actually was a nice 2-day trade back to the highs. And then this day, I remember buying it right around 283-ish, and it hurt. You know, then you had your pull into the moving averages. It now resumed or regrouped pretty well. So I think with some more sideways action, you know, in this market, and if it actually comes out with a good earnings for the first time, because the last two have been like mediocre, but they've given it passes, this stock is going to explode through 284. I'm probably going to have some kind of call spread situation there if it doesn't break out before.
Well, banks also held up well. We've been talking about regional banks like Zion, which also held well and looks like it's poised to go higher, right?
Yeah, this time I think it's a bit extended, but this goes to show you that when you get corrective type activity, and your stock does not go down and you see relative strength, which is a term we use, which is a tactic that we go over many times, it means that when you go up, you go to it. And if you look at this, here it's a great example. Look at Zion, a regional bank that really didn't pull in. Look where it was above the 8 and 21, didn't get to the 50, didn't get to the 100, and pow, explosive move. I think Taylor was trading this. Some people on the desk were talking about it. It was in off the charts. Same thing with this MTB, just real quickly. You know, look at the size of this base going sideways. This was during the corrective process. Did not go down. Then you get a breakout. There are ways to figure out where the relative strength is so you can create some alpha for yourself once the market bounces back.
Right, and maybe one of those ways we can figure out what the relative strength is with the bigger banks is to compare them to their peers. Unlike its peers, which saw their 100-day on the pullback, Wells Fargo held the 50-day and is now back above the 8 and 21.
Yes, and this one I think they say doesn't have as much exposure to overseas, whether it's China and Europe. So with that said, they're grouping it as a more domestic bank, and with rates going higher, they say the banks could make more money. So this one, you look at the chart, it does look like the first one of that group that will be making new highs. If you sat through this one, it's not always the best trader, but you know, every now and then you do see the relative strength here, and at this particular point, you have a nice channel. And if this bank does break out and go, you know, it's going to give some clues that, you know, I guess we're going to have to take a closer look and put some more risk on that. We might not revisit that 1560 area, so that could help us look.
All right, time for some quick hits. Let's talk metals. GLD closed near its lows yesterday. What do you think there?
I think that there's enough blood there that you can get some kind of balance. It's been in a downtrend. It's intensified. I think a lot of people in the community didn't get caught long. They've been making money short there. At this point, it's a little bit of a dangerous short, I think, in my opinion. It's not quite in that 113, 117 area that I talked about yesterday that I would have liked, but we now have some new points of reference. You look real quickly at the GLD, you will see, you know, here's yesterday's bar. Okay, let's make it a little bit bigger. You know, it closed near the lows, so if you get a red dog reversal where it trades below 118 or so into that and comes back up, maybe that's a small entry. Or if they try and push it into this gap for a cash flow, maybe that's a little bit of a trade. But overall, this trend has been to the downside. You've had lots of areas to make adjustments, and anybody who's been sitting through this decline, you've been, you know, missing all the signs. One right here at 161, one right here at 149, one right here at 130. So now we'll see what happens in the next few sessions there.
And we talk a lot about Scott's thesis about going long the TBT and short the TLT. And yesterday the TBT did take a bit of a rest, but thesis remains intact. Higher prices in store.
Looks like it. Looks like rates are going to continue, but they just spike, so they need time here. And the TBT, you know, I would have liked them to, you know, would have liked this ETF to come in a little bit further, but look at the chart here. It's not. This was the move that started with what, 2 jobs numbers ago or whatever it was. Big gap and go, boom. cleared resistance here going well to the left. And then you had this small little pullback and it's flagging again. So with that said, it's letting the 8-day catch up, which is right there. So it's not as extended as it was. And the longer it stays in this flag above the 8-day, the higher the probability we get a quicker trade here through this 76.13. So we'll see what happens there.
And over in our 3D printing stocks, 3D Systems, buyers did step in around the 50-day yesterday, and it does have resistance at the 8 and 21. We just have to see if it can break through there. Yeah,
this group I still think has a lot of room in front of it, a lot of innovation, and it's a new group, so to speak. But with that said, there's always corrective type base out phases, and that's what it's in right now. There's always, some articles out there saying, oh, it's a fad, it's this, it's that, but I think it's here to stay. Anyway, you look at Triple D, you'll see here that, here was your high area that wound up proving as resistance, came in, tested the 50-day, didn't get to the 100, showed some strength. You now have a new point of reference right there, but it's going to, probably get a little resistance halfway in where the moving averages curl down. So at this point, if you could stay above the 50-day, put in a nice inside range, maybe we'll get a pivot to trade it. But ultimately, I would continue to trade this group. I know Steve LeVay and Mike Lee, they trade this one. They trade EXONE, which has been really a stellar new issue from this year at highs. Again, showing you how there's a lot of potential in these new issues in the right group. Look at that, boom. You already got like almost a two-bagger here. And then, SSYS is also there.
Right. Well, and if you watch us anytime, you know that Scott loves his iPhone. Not a big fan of BlackBerry, but we like to look at the chart, right? And the stock gained another 2.4% yesterday. Yeah, and if you remember, I think it was Tuesday, the market was, open lower with that whole big, China down 5%, and this was one of the first ones who went green. And guys on the side were like, oh, Red Dog, look at BlackBerry. And I'm like, oh, again? And this time it actually, went green and continued, and it's been inching higher. You look here at the chart now, you will see that, and Brittany, you have that support going way across here, right? 13 and change. It now had that engulfing bar on, I believe it was Tuesday, continued, and then now it's above, this 15. You have your major downtrend area here. You have earnings on Friday, so you have to be a little bit careful. If it were me and I wanted to be long BlackBerry, I would use some type of calls or call spread, because if they miss, you have 32% of the float that's short, and they'll probably beat on the stock. But if they do have a nice quarter that people aren't expecting, a lot of those shorts might have to cover, and you could see a blockbuster move back to those old highs of 18. But for me, either trade after the report or do some kind of options, because risk is premium. Paid. Well, if we talk BlackBerry, we got to talk Apple too. Why don't you just show us the levels to watch there?
That was really good. Anyway, here we go. Here's Apple. I've been trying not to focus on it. I've been trying not to talk about it too much, and rightly so. We talked about this inverted head and shoulders pattern that failed right here. That was an ascending channel coming right into resistance. Did it break above resistance and go nuts to the upside and change its composure? No. Okay, you look closer here. This is when it pretty much went off my radar, right when it broke this 444. Then, right here is worth another look just in case with the developers conference, and it failed. Then you had, what was this, 428 it broke below, then it broke below 419, another area where you could have got out of the way, and now it's barely holding on to this. Okay, so this is your new point of reference, 395.66. There's the previous low of 385. And listen, a lot of people are out there that are just like, the PE is so low, you strip out the cash, it's this, it's that. At this point, nobody, everyone's recommending it, or a lot of people are saying it's a value down here, but until it really changes character, just keep it on the C list. And we'll see if something changes, because even me, this is something that I traded every single day. It was, a big percentage of my annual income. And lately, I've been just like, okay, going to find new vehicles. I'm going to try new go-to situations that I could see every day, and I could learn the complexion. Because with Apple, I don't want to be really shorting it down here, even though it's been working, but buying it doesn't work either. So it's just on the side until something changes for me.
Right. So Apple's on the side. How are you positioning yourself heading into the trading session today?
Today, coming flat. We reached that 1603 area, which was my target. I came in yesterday with 5 longs. Flat now. I'm going to figure out, can I make some tactical money? Maybe a cute little trade. And actually, this morning I did buy a little silver. So for full disclosure, I bought a little SLV, thinking that maybe we get some kind of cute bounce, but my stop will be yesterday's low. But on other things, I'm going to see, I'm probably not going to be chasing the market to the upside, especially the spiders here, but I'm going to wait a little bit to maybe test a short. I think 161 to 162 might be an area to test a short versus on this open, because yesterday everyone just tried to fade the open and they didn't do so well. So selling into this spot makes sense. You know, selective buying in key names might make some sense, like the ones we went over, but just blindly shorting, saying, okay, we're going to go back to those summer lows, could cause you some pain, because they could have a pain trade even to fill that gap up until about 1620 something.
Right. All right. Well, happy trading, everybody. Have a great Thursday.